What's up, everybody? Welcome back to Acumen BTC. Today, we're diving into another week of Bitcoin on-chain analysis. This week, we're seeing some really interesting signals, especially around institutional activity and long-term holder behavior. And they might surprise you. Are the big players accumulating, or are they starting to get cold feet? Let's see what the blockchain is telling us. As always, nothing in this video should be considered financial or investment advice. This content is for educational and informational purposes only, so always do your own research. All right, let's start with Bitcoin's price action this week. It was a relatively quiet week overall. Bitcoin closed at $64,000, down just 0.27% over the past 7 days. In other words, the market was essentially flat. We're still consolidating, with no significant move in either direction. However, while this kind of sideways price action can be frustrating, periods of consolidation often precede larger moves. So let's see what the on-chain data is telling us about where the market could be headed next. All right, let's start with our market cycle score. This is a proprietary indicator we've developed to help identify where Bitcoin is within its broader market cycle, using a scale from 0 to 100. This week, the score comes in at a value of 23. A reading below 30 places us firmly in what we call the accumulation zone. Historically, this is the phase where patient investors and long-term participants tend to accumulate Bitcoin while overall market sentiment remains weak. And that brings us to sentiment. This week's Fear and Greed Index came in at 28, firmly in fear territory, reinforcing the same message. So, while price action may seem uneventful on the surface, both our market cycle score and sentiment indicators continue to point toward a market environment that's historically been favorable for long-term accumulation. Now let's dive into the on-chain data, because this is where the market starts telling its real story. Let's begin with NUPL, or Net Unrealized Profit and Loss. This metric helps us understand the overall emotional state of the market by measuring unrealized gains and losses across the Bitcoin network. This week, NUPL came in at 0.17, keeping us firmly in the hope-fear zone. We also saw a slight weekly decline of 0.003, suggesting that sentiment has weakened just a bit compared to last week. Nothing dramatic, but it's another sign that confidence remains fragile. Next is the MVRVZ score, one of the most reliable valuation metrics in Bitcoin. It currently sits at 0.37, well within the neutral zone. While it increased slightly over the week, the broader picture hasn't changed much. The market still appears neither overheated nor significantly overvalued. Okay, let's look at the supply and profit. We're sitting at a value of 54.1% this week. This tells us how much of Bitcoin's circulating supply is currently sitting at an unrealized profit. This week, that figure remains extremely low and declined slightly from last week, meaning an even larger share of holders are underwater. Historically, these conditions tend to coincide with periods of market pessimism and long-term accumulation. All right, now, next, let's take a look at the Arch-Odal ratio, one of my favorite long-term cycle indicators. The Arch-Odal ratio compares the realized value of coins held by long-term investors against those held by newer market participants. In simple terms, it helps us understand whether experienced holders or short-term speculators are driving the market. This week, the Arch-Odal ratio came in at a value of 977, placing it firmly within our accumulation zone. What's particularly interesting is that the indicator continues to trend lower. Historically, declining Arch-Odal values suggest that older coins are becoming increasingly dominant, while speculative activity remains relatively subdued. That's exactly the type of behavior we tend to see during accumulation phases, when long-term investors continue holding or adding to their positions while short-term speculation fades. So once again, the Arch-Odal ratio is telling a story that's remarkably consistent with what we've already seen across NUPL, MVRV, and the other on-chain metrics. So when we put all of these metrics together, they're telling a remarkably consistent story. Market sentiment remains subdued, valuations are still relatively modest, and long-term investors continue to find conditions that have historically been associated with accumulation rather than distribution. Now, let's move over to our Institutional Intelligence dashboard and take a closer look at long-term holders, or LTH. These are investors who have held their Bitcoin for at least 155 days and are generally considered the market's strongest hands. Their behavior is one of the most reliable indicators of long-term market conviction. This week, long-term holders added more than 108,000 Bitcoin, increasing their total holdings from 16.68 million to 16.79 million Bitcoin. That's a meaningful increase, especially considering that price action has remained relatively flat while overall market sentiment continues to sit in fear. Instead of distributing their coins, long-term holders continue to accumulate, reinforcing the idea that conviction remains strong despite the current uncertainty. Historically, this type of behavior has often been observed during accumulation phases, when experienced investors, quietly, build positions before broader market sentiment begins to recover. Now, let's shift our focus to institutional activity through the spot Bitcoin ETFs. This week, the ETFs recorded a modest net outflow of 1,370 Bitcoin, bringing total holdings to approximately 1.45 million Bitcoin. Most of the outflows came from Fidelity's FBTC, with 1,031 Bitcoin leaving the fund, followed by Grayscale's GBTC with 637 Bitcoin and ARK's ETF with 483 BTC. BlackRock's IBIT also recorded a relatively small outflow of 43 Bitcoin, while BITB was one of the few funds to post a slight inflow, adding just 3 Bitcoin. Overall, this tells us that institutional demand softened during the week. Rather than seeing broad-based accumulation, ETF flows were essentially flat to slightly negative. That doesn't necessarily signal a bearish shift. These types of flows are often influenced by portfolio rebalancing, short-term positioning, or simply investors waiting for greater market clarity. For now, the key takeaway is that institutions aren't showing aggressive buying pressure at current prices, but they're not exiting the market in any meaningful way either. So, while Bitcoin's price action this week was relatively flat, the underlying on-chain data and market sentiment tell a much more compelling story. We're firmly in an accumulation phase according to our market cycle score, reinforced by a fear reading on the Fear and Greed Index. The low supply and profit and Hope-Fear NUPL reading suggest a market that's not overheated, with plenty of room to grow. If you'd like to explore these metrics in more detail, head over to acumenbtc.com. Inside the Intelligence Room, you'll find all of these metrics updated daily, our AI-generated weekly market brief, a powerful portfolio tracker, and a growing suite of tools designed to help you better understand Bitcoin's market cycles and make more informed decisions. You'll find the link in the description below. If you found this analysis helpful, be sure to like the video, subscribe to the channel, and turn on notifications so you never miss our weekly updates. Thanks so much for watching, and I'll see you in the next one.